All right, welcome to The Explainer. Today, we are diving deep into Patterson-UTI's second quarter earnings for 2025. It's a really interesting story, kind of pitting some near-term challenges against a really big long-term bet on technology. So let's get right into what this all means for the company's future.
So, right off the bat, you look at the headlines and it's a classic mixed bag. On one hand, hey, revenue came in a little bit ahead of what people were expecting. But on the other side of the coin, earnings per share, a huge miss. I mean, we're talking about 50% lower than what analysts were calling for.
So how did the market take this? Well, with a healthy dose of caution. The stock actually closed down 1.1% on the day of the call, and what's really telling is that it was on way higher than average volume. That tells you a lot of people were paying close attention and, frankly, feeling a little uncertain.
Yeah, that reaction from the market is a big clue, right? It tells you there's more to the story than just those top-line numbers. So let's peel back the onion here and see what investors were really reacting to.
Okay, this table really lays it all out in black and white. You see that skinny revenue beat, but the real story, the thing that probably spooked people, is that GAAP EPS miss. It was 9 cents wider than expected. And it wasn't some small operational thing. It was almost entirely due to a big, one-time, $28 million write-down they had to take on their operations down in Colombia.
So where did the money actually come from? Well, no surprise, completion services was the big engine here, and management pointed out something pretty interesting. Even though some of their regular customers had some downtime, they were able to jump in and fill those gaps with spot work. That was absolutely key to keeping that revenue number solid.
But here's where the story really pivots. You'd think with these mixed numbers, management would be defending the quarter, right? Nope. They barely spent any time looking backwards. Their entire conversation on that call was laser-focused on the future, and specifically, this massive push into technology.
And the CEO, Andy Hendrix, he really hammered this point home. He basically said, look, our competitive edge isn't just about having the best rigs and frac fleets anymore. That's table stakes. The real secret sauce, he says, is in the digital and automation layers that they are building on top of all that heavy metal.
And this whole strategy really boils down to two key pieces of tech they've built in-house. You've got Cortex, which is their brain for automating drilling, and then you have its twin, Vertex, which does the same thing for hydraulic fracturing, making it all smarter, cheaper, and more efficient. And they're not just talking about it. They've laid out a super clear plan for everyone to see. It starts with getting these platforms out there, plugging them all into this central digital performance center, and it all leads up to this one huge milestone, getting their entire completions fleet running on the Vertex system by the end of this year. That's the big promise, the tangible goal they want the market to hold them to.
Okay, so a big tech push is great, but what about right now? What does it mean for the next few quarters? Well, management gave us a pretty cautious, but I'd say strategic outlook. They're not sugarcoating the tough environment, but they are pointing to some specific things to look forward to.
So, in the short term, they're telling us to expect a little bit of a slowdown. The rig count's going to dip into the mid-90s next quarter. But, and this is a big but, they expect free cash flow to really pick up steam in the second half of the year. And the real prize they keep pointing to, that's 2026. That's when all these new LNG export facilities are supposed to come online, which could be a massive catalyst for the natural gas side of the business.
But okay, why all the caution for right now? I mean, what's going on? It really comes down to the macro environment, which is just tough. And this isn't just a Patterson-UTI problem. This is a storm the whole industry is trying to navigate.
And management was super upfront about what they're up against. They basically ticked off 4 big worries. You've got OPEC Plus making noises about opening the taps to grab back market share. You have oil prices being so volatile that customers are getting nervous about spending money. Then there are fears about trade policies and what that does to global demand. And just layered on top of all of that, a whole lot of geopolitical uncertainty.
Okay, so you take the kind of meh Q2 results, you weigh them against this really ambitious long-term tech strategy, and then you throw in this cloudy macro picture. How on earth are you supposed to think about this stock? Well, it's time for the next call.
First things first, the stock price. Based on everything we just went through, what do we think is going to happen in the near to medium term?
Our call here is that the stock is probably going to be stuck in a trading range for a while. It's caught in this massive tug-of-war, On one side, you have the short-term operational headwinds pulling it down. On the other, you have this really compelling tech story that's holding it up. We just don't see a big move in either direction until the bigger picture, the macro story, gets a lot clearer.
So that price prediction leads us to our final overall rating for Patterson-UTI, which is market perform. Now let me walk you through the thinking behind that.
Look, the bull case is pretty clear. It's all about their leadership in tech, that potential home run in the 2026 natural gas market, and the fact that management is really disciplined with their cash. But the bear case is just as clear, and it's all about what's happening right now, the slowdown in drilling, and all that macro uncertainty that they just can't control. So the big question you have to ask yourself as an investor is this: do you believe their tech-driven future is going to get here before these short-term headaches cause some real damage?
And of course, we always have to say it, this is not financial advice.